All right, guys, there you have it. Upsales launched back way back in 2003. It took them 7 years to hit $1 million in revenue. Now doing 14.4 million in terms of run rate across 1,800 paying customers. Profits around $250,000 per month. They're publicly listed in Stockholm, which is great. It allows them to tap public markets, recruit folks who can see his numbers publicly in his comments. He feels it is a real advantage, and they've done this all very capital efficiently with a target revenue per employee going from $205,000 today, ideally up to something closer to $300,000 by the end of the year. We'll see if Daniel can make it happen. Hey folks, my guest today is Daniel Wickberg. He's the CEO and founder of Stockholm-based SaaS company Upsales. He started the company in 2003 to help B2B companies grow revenue. Today, the company is 70 people strong with over 90% of recurring revenue in 1,800 countries in 1,800 customers in 10 countries. They're at 13 million euros of ARR and have a long track record of profitable organic growth, which we love. Daniel, are you ready to take us to the top?
Let's do it.
Profitable and organic are two words I feel like I haven't heard in like a decade in SaaS world. How have you done this?
Exactly.
You're in a very competitive space.
No, I mean, I think we've been focusing a lot on finding the right niche for us. So we try to focus on a couple of verticals where we think we can make a difference. And also in the Scandinavian market, I think there's a clear gap in the kind of mid market. So you have all of these players for really small companies, and then you have Salesforce and a couple more for enterprises. But companies with between 100 up to 1,000 employees, that's where we really make a difference.
And when you say you have sectors you focus on, what are some of those sectors?
So other SaaS companies is a strong vertical for us. We're also seeing strong growth in manufacturing companies, and I think also our philosophy has been to the more we focus, the more successful we become, because we tend to focus our product development efforts as well, to make sure that we have critical features that our competitors don't for the specific companies we target.
Give me an example of that. What's something you've built for the manufacturing vertical that your competitors don't have?
So for manufacturing companies, for example, you have this huge problem with if you're selling a complex product that you can sell in like 1,000 variations. You have this huge problem with proposals. Takes a lot of time for salespeople to create, and some of the time, you offer something that's like erroneous to the customer. And then you build that stuff and you ship it to the customer like 8 weeks on a boat, and then the customer calls you and says, "This is not working for me." So that's one problem we address to kind of streamline the proposal and automating for complex sales.
Mm-hmm. That makes tons of sense. Now, when I had you back, I had you on the show about 6 months ago, and you told me it took you 7 years to hit $1 million of revenue. I would tell most people, if you can't do it in 3 or 4, just quit, give up, and start something new. Why'd you stick with it?
I mean, I was 21 when I founded the company, so I guess I had a lot of energy, and I didn't realize how slow things were going. Yeah, I mean, we saw like gradual success continually. So yeah, I think just continue working. Nothing more fancy than that.
Now, you have an interesting trajectory, because back when you were on the show in 2019, you told me that your ARPU was around $1,250 per month. Then when I had you on 6 months ago, that had dropped to 600, but you had more than tripled your customer base. Where is ARPU today? Is it still around 600?
I mean, I would say our customer base is a little bit distorted because we have around 800 or 900 direct customers. And I think those customers account for like 90+% of our ARR. And then we have the other 50% of our number of customers, which we inherited from a partnership we used to have with another company, where we sold a white label version of Upsales. So we have like a very long tail of very small customers. So I would say the annual ACV is still around 12 to 13,000 euros per company. Looking at like the real customers we have, so to speak.
The 18, yeah, that makes a lot of sense.
Oh, what's going on there, YouTube? Good to see you guys. Now imagine this. You love watching these interviews with SaaS founders, but imagine if we took all of the valuation data out from over 2,807 interviews I've done manually. Saves you a lot of time. Well, we've done this. We've built it into the beautiful interface inside of FounderPath. Check this out. I'll show you how you can access this in a second, but you log in, you connect your Stripe account, you see your valuation real time, you can see what it changed over the past 88 days, and even set goals for valuation this year. Now, the secret to valuation is there's many different ways to value a SaaS business. So the reason you're going to see 3 or 4 different valuations inside of your FounderPath dashboard, this is all free by the way, is because depending on who's doing the buying of your SaaS company, you're going to get a different valuation. A VC is going to pay a different valuation. Private equity firm is different. If you're going to do a minority sale, that's different. And if you sell the whole business, that's a different valuation. You can see all those when I hover over here. Right, so the teal is what a VC would pay, yellow is what private equity, and red is if you sold the whole thing outright. Now, what's cool about this is not built off random data. Again, you guys hear these interviews on YouTube. All these data are built from real-time valuation data points founders share with us on the show. So traction, 1.2 million, seed round, 3.7 raise, they sold 22% of their business. Go in here and filter by the event. Maybe you only want to see companies that have sold the whole business. Well, here are a bunch that have been acquired, the valuation and the multiple. Maybe you're going out right now and you're raising your seed round. Well, go in here and look at all this recent seed deals that went down, what they raised, what valuation they raised at, and what percent that they sold. There's never been a larger data set of SaaS valuations than what you can get now inside of FounderPath, and we're thrilled to bring it to you. All right, we're going to go back to the YouTube video here in a second, but if you want to check this tool out, if you want to jump in and sign up, you can check it out for free to get your valuation at this link, founderpath.com/products/valuations. Or if you go to founderpath.com and hover over products, click on get your valuation here and go ahead and sign up to give it a whirl. Again, all that valuation data live right inside the platform. I hope to see you there. All right, let's jump back into the interview.
It sounds like there's a story there. Did you have a white label partnership with a partner and then they went out of business and then you took it over? Or what do you mean inherited?
No, so the story was there's a Swedish company called Fortnox that does small business accounting and invoicing. And they used to have a CRM in their product, which they wanted to discontinue. So we made a partnership deal where we offered upsales to these customers who were using their own product. And we had that partnership for, I think, 2 or 3 years. But we realized that churn was a little bit too high and the growth was not really coming from these customers. So we just renegotiated the contract and migrated these customers to become direct customers of upsales.
I see. Do you still pay any kickback to Fortnox, a recurring commission fee or anything?
Yeah, but it's like a very small part of the P&L.
I see. And then
and cost actually.
Okay. Yep. And then before we talk about future growth plans and how you're thinking about future product at Upsales, what is MRR today?
So MRR today is, let me just see this in your currency.
He did the conversions ahead of time, which we appreciate.
Yeah, it's around $1.2 million is the current MRR.
Got it. So that's up about $100,000 since when we chatted 6 months. So you've added about 1.5 million in new ARR over the past 5 months. Is that about right?
Yeah, sounds about right.
And where's the growth today coming from? If you've shut down the partnership channel, how are you getting more direct customers?
So, I mean, we divided our sales team into a new sales team and an expansion sales team. And we have a kind of deliberate land and expand pricing model. So I think maybe 2/3 come from existing accounts and 1/3 from new accounts. And I mean, we're actually spending some time now thinking about our pricing because we realized that companies up to 100 employees, for those companies, our pricing makes total sense. And a good customer pays us around 1% of their revenue. But as you go up, looking at bigger customers, we tend to have a lower and lower take rate. So now we're working on differentiating the pricing to have more of a kind of an enterprise offering for larger customers.
Mm-hmm.
So when I talk to investors, I usually say that we think that we can triple our revenue without bringing in a single new customer, because the potential in the existing customer base is still massive. And in our kind of target list of new customers, only in Sweden, I think we have like 3 or 4% of those customers today. So there's also like a massive opportunity and a long runway of new customers to sell to.
And obviously, I would say the macro environment today is more volatile than it was when we spoke 6 months ago. 6 months ago, you told me you were doing about $250,000 a month in profits. Are you doing more or less in profit today, monthly?
Yeah, I mean, I would say pretty much the same. We had a really good quarter in Q4. So, I mean, I think one of the secrets, I mean, to organic profitable growth is just to have an effective organization. So, I mean, we look a lot at revenue per employee and try to grow the organization in a sensible way.
What's your target there?
I mean, I think now we are at around maybe $200,000 per employee per year in revenue, something like that. And I mean, I think we can push that to 300 if we do everything right.
Which job title do you think you can get more efficiencies out of to drive up the revenue per employee? Is it salespeople ramping fully? Is it engineers releasing product you can upsell? Where's the efficiency gap?
I mean, I think we have more efficiency to do when it comes to kind of the everything related to customer success, to support and onboarding and the small part of the business that services. But also, I think that as we are kind of moving up the value chain and trying to sell to larger customers, we realize that the right type of salesperson can carry like a 3 times bigger quota. I mean, they need some more support in terms of pre-sales or sales engineers, but I think there's more efficiency to gain from that.
Well, I was surprised in 2019. You told me that some of your quota-carrying sales reps would make a $20,000 US base. Their quota was $200,000 for the year, and if they hit quota, they would earn another $20,000 in commission. So $40,000 OTE against a $200,000 quota. I remember thinking, "Whoa, that's a low quota," but you're also paying a lower amount, so the ratio still works. Has that changed today?
That has absolutely changed. I mean, we used to have a strategy that was kind of a shotgun approach. You know, let's hire 10 newly grads every quarter and hope that 3 of them survive.
Everyone's listening right now laughing because we all do that. That's how it all starts.
Yeah, but I mean, it's not a long-term initiative, because the people who are able to hit the numbers, they grow tired of this kind of banging the head against the wall strategy. So I mean, now we are more and more looking for people with at least 5 years of experience selling software, and giving them a quota between $500,000 up to $1 million per year.
And if they hit that $1 million quota, what would their OTE be?
Their OTE would be around between $120,000 or $150,000.
Oh, wow. Okay, that's great. That makes tons of sense. Actually, I guess talk to me about where you want to go this year. So you're at called a $13-14 million run rate today. What do you hope to get to by December this year?
I mean, our growth rate has been around 30% per year, our ARR growth rate. And I mean, since we're a listed company, we don't have any official guidance of where we want to go. But we've been able to increase the growth rate for 2 years in a row. And I mean, I think the opportunity in the market is just massive. So it's all about just scaling the organization. That's the bottleneck for us.
Mm-hmm.
And us being still a really small company, actually, I think that, just finding 5 or 10 more good salespeople can bring us from 30% to 50% in growth rate. So, I mean, that's where I spend all my time, just thinking about how to scale the sales organization as effectively as I can. And
is this right? I'm on Yahoo Finance right now. I'm seeing a $1.236 billion market cap this morning. Is that you guys, or is that a different company?
That's us, but that's in SEK, so you have to divide it by 10.
Oh,
So it's around $120 million right now.
I was doing math going, holy crap, most other public traded SaaS companies are trading like at a 3 or 4x. He's trading at like almost 100x, but it's in SEK.
Oh, no,
okay.
no.
120 million.
Right.
Is it good? I mean, you IPO'd earlier than most SaaS companies in the US. They wait for $100 million in revenue. Has being public been a real advantage for you?
Yeah, I would say it has. I mean, I have some friends who have really poor experiences from doing an IPO, so I try to learn from their mistakes. And I think one key thing that actually made it work for us was that we made a very deliberate decision when we went public that we're not going to allow this stock market stuff to eat 90% of our schedule. So I spend 2 days every quarter in investor meetings, always in relation to when we release the quarterly reports. Yeah, I mean, I think we've been able to we don't spend too much time on it, and it doesn't cost more than it should. And I think that especially when recruiting people, it has been an advantage that people can read our numbers and read the CEO comments, and yeah, you get some increased exposure basically. So yeah, I mean, I'm super happy with that decision.
On that note, Daniel, let's wrap up here with the famous 5. Number 1, favorite business book.
I think it's still Hard Thing About Hard Things.
Yep. Is there a new CEO you're following or studying?
No, I'm into geopolitics the last year, so mostly boring people I read right now.
Who's a politician you're reading a lot about right now?
I mean, not a politician, but there's a guy called Peter Sayan who's this geopolitical expert. He's quite a cool guy, writing a lot about Ukraine stuff.
Okay, now is there a presidential run in your future?
A presidential run in my future?
Well, in Sweden, obviously not in the States, but are you going to get active in politics at some point, you think?
Never.
That's smart, man. Number 3, what's your favorite online tool for building up sales?
I mean, we've had, I think you mentioned this the last time, but we've had massive success with this French tool called Galaxy to prospect on LinkedIn. Yeah, we're still using that quite a lot actually to drive.
Do you let them use it on your account? I always get nervous with these tools actually using my account because I'm like, if they do anything bad, then I get banned and I'm cooked. Do you let them use your personal account, and how do you get comfortable with that?
Yeah, actually they do, and I mean, we started slow and we monitored it, but everything the tool does is you do the programming yourself, so you are kind of in the driver's seat.
Very cool. Very cool. All right. Number 4, how many hours of sleep do you get every night?
I'm sorry?
How many hours of sleep do you get?
I mean, I try to get 8, but I have a 3.5-year-old, so sometimes I get 2.
That's funny. Okay. So 3 kiddos, and I think you're 41, right?
42.
Happy birthday. You had a birthday recently, it sounds like. And married. I guess last question here. Something you wish you knew back when you were 20.
I mean, I think I've actually matured a lot in the last 2 or 3 years in my thinking about business. And I think just, I'm a very hands-on guy, and that's not always a good thing. So try to let go of more of the details, basically.
All right, guys, there you have it. Upsales launched way back in 2003. It took them 7 years to $1 million in revenue. Now doing 14.4 million in terms of run rate across 1,800 paying customers. Profits around $250,000 per month. They're publicly listed in Stockholm, which is great. It allows them to tap public markets, recruit folks who can see his numbers publicly in his comments. He feels it is a real advantage, and they've done this all very capital efficiently with a target revenue per employee going from $205,000 today, ideally up to something closer to $300,000 by the end of the year. We'll see if Daniel can make it happen. Daniel, thanks for taking us to the top.
Thanks a lot.
One more thing before you go. We have a brand new show every Thursday at 1 p.m. Central. It's called Shark Tank for SaaS. We call it Deal or Bust. One founder comes on, 3 hungry buyers. They try and do a deal live, and the founder shares back-end dashboards, their expenses, their revenue,
ARPU, CAC, LTV, you name it, they share it. And the buyers try and make a deal live. It is fun to watch every Thursday, 1 p.m. Central. Additionally, remember, these recorded founder interviews go live. We release them here on YouTube every day at 2 p.m. Central. To make sure you don't miss any of that, make sure you click the subscribe button below here on YouTube, the big red button, and then click the little bell notification to make sure you get notifications when we do go live. I wouldn't want you to miss breaking news in the SaaS world, whether it's an acquisition, a big fundraise, a big sale, a big profitability statement, or something else. I don't want you to miss it. Additionally, if you want to take this conversation deeper and further, we have by far the largest private Slack community for B2B SaaS founders. You want to get in there. We've probably talked about your tool if you're running a company or your firm if you're investing. You can go in there and quickly search and see what people are saying. Sign up for that at nathanlatka.com/Slack. In the meantime, I'm hanging out with you here on YouTube. I'll be in the comments for the next 30 minutes. Feel free to let me know what you thought about this episode. And if you enjoyed it, click the thumbs up. We get a lot of haters that are mad at how aggressive I am on these shows, but I do it so that we can all learn. We have to counter those people. We got to push them away. Click the thumbs up below to counter them and know that I appreciate your guys' support. All right, I'll be in the comments. See ya.